what you have are homeowners that got into mortgages back in 2019, 2018. Those are going to reset. So now it's going to jump their mortgage from 3.5 up to 7.5%. Maybe they can't make that mortgage payment. So that property could potentially become a bank owned, an REO property. So they're going to go delinquent. They're going to go into foreclosures. We've already started to see those trends happening. It started back in September. The rates have been going up. I think they're going up about 3% a month from month over month with delinquencies and foreclosures. So those are buying opportunities for people to get in there and do subject to deals, because it kind of mirrors, in my opinion, what we saw back in 2010 and 11 and 9. The real estate investors who were doing really well, people who would buy subject to, help people out of distressed situations. Because when you lose your jobs, you've seen a lot of layoffs in the tech industry, right? So what happens to those people? They lost their jobs, or in a mortgage they can no longer afford. Or they can't make the payment on because they bought too much house. They got property taxes, so you can go in, you can solve their problems. Private lending, I think, is going to be huge as well, because as interest rates go up, it compresses the ability for people to borrow, because again, standards can change as well, especially for investors, because banks get nervous. So be a private lender on that side. And so those two strategies, I think, is something in REO deals is going to be, it's not now, but I think you got to wait 8 months or a year, and you're going to see more of those come into play.
That might be the case, because you see people, whenever they're talking about interest rates increasing, and they immediately say, oh my gosh, the market's going to crash. Keep in mind that the interest rates are only raised from that point on. You're talking about resetting a small amount of the loans that are not fixed, right? So if you have an adjustable rate, all of a sudden your payment goes up, and it could go up almost double, and you're in a deep doo-doo, right? And so now you got to get rid of it, and you're in this market where the reality is there's not a lot of inventory on the market. It's about half of what normally is. It's about 3 months. When you look at the default rate on mortgages, it's about half its historical amount. But we're seeing lots of default for the people that bought during this last run-up. Like in the first half of 2022, if you bought a house and you have a mortgage on it, you're probably pretty upset right now, because the house price probably dropped a little bit, and you're looking at it going, what's my alternative? What should I be doing? Maybe I should be walking away from this thing. And I think, to your point, that's where the short sales come in, and that's where foreclosures could come in. But here's the biggest factor for me. Yesterday, the Harvard Joint Center for Housing put out another report. And it used to be that the baseline of how many houses we had to add to the inventory every year to keep up with demand was 1.2 million. The last few years, it's been closer to 1.5, 1.6, 1.7 million. And we were targeting that 1.2, which just simply means we're underbuilt. And because of interest rates increasing, it's going to exacerbate that problem, because new home builders are like, shoot, I'm not going to build. Nobody can afford my house.
Yeah, but a lot of those, don't you think? So here's what's happened with the builders. You were building when materials were at all-time high. So now you've got all this money invested in the property, and you were expecting to sell it for X because real estate's been going up. So you're willing to pay, $75 a sheet for OSB. But now the prices aren't there. But you can't have people that can qualify for these mortgages. So now these home builders are sitting on inventory, and what are they going to do? They're going to have to slash prices, take losses.
And I agree with you 100%. And it's going to bring that price down.